All right, folks, welcome back to the Short Vol Show. Broadcasting on a Sunday night for you. And I just want to talk for a second about those of you who are considering just starting out at trading options. And I hate to sound like your dad, but this video is going to start with a little lecture here. You need to firm up your financial position a little bit before you jump into trading anything, but also trading options. What do I mean by that? Well, you want to have your rent paid for. Now, this might sound obvious to some people, but to some people it's not. A lot of people get into the stock market and they immediately trade things which I would consider inappropriate for someone who's just starting out. And that's not because someone just starting out is dumb or something like that. It's because you want to trade something appropriate to be just starting out. A lot of people will get into the market and they will get swept up in a net of a chat room or something and get involved with these people trading like bio stocks or basically very risky stocks, because what they're looking for is action. Somebody who wants to be successful at growing the money they have and managing the money they have, we're in the business of managing risk. We're not in the business of action. Go put on Fortnite or some video game if you want action. For trading, we want to smartly play our cards right so that we make money, and therefore we want to start and think about things in a systematic and logical way. So the first thing you want to do is you want to firm up your financial situation. So that might mean that you're not going to be starting to trade for another couple months or something, because you've got, you don't have a job. You have all these debts that are, calling your house. If you have debt collectors calling your house, you shouldn't be trading options right now. You should be getting a job that pays real money consistently and paying down some of that stuff. If you've got serious financial issues right now, you shouldn't be trading options, because it's going to distract you from trading. You're not going to be able to trade right if you've got serious financial pressure coming from elsewhere on you. And I know this kind of goes outside of what some people want to hear from a trading video. And it's funny, I always complain because there's a lot of YouTube channels of doom and gloom saying, oh, the market's going to crash tomorrow, and they get tons of views. It's clickbaity. People like conspiracies. They like to hear how the market's going to crash tomorrow. And me coming on and saying, well, the market's slowly going to go up, and that's the most likely thing, isn't sexy. But you know what? We're here to make money, not to be sexy. And, as it turns out, like 3 months ago, there were a lot of predictions out there saying the market's going to crash. And guess what? It didn't crash. It went up slowly, like many of us predicted, which is basically just doing what it's been doing the whole time. And but I'm not going to sell out and say, and start making videos of doom and gloom when that's not the reality. So anyway, you need to firm up your financial situation before you start trading options. The other thing I wanted to address is the disclaimer. You'll see a lot of people on financial videos, they're putting a disclaimer up. It's all these words. It's kind of like you see with like car commercials with funding or and I want to explain that and talk about its importance, and I want to give my own disclaimer right here. I am not a financial advisor. I'm not licensed as a financial advisor. If I was licensed as a financial advisor, I still couldn't give you advice over YouTube. If you're going to seek professional advice in finance, if you have a specific situation and you want to seek professional advice for that, don't do so on YouTube. Go and seek references and get a financial advisor to give you that advice. When we make videos on YouTube, it's a general video. It's some ideas. It doesn't fit your personal financial situation because I don't know what your situation is. And if you're somebody who has a very good job or has family money and has thousands of dollars sitting around, which many people do, then you're going to have a different strategy from somebody who is, let's say, working 3 minimum wage jobs and trying to make ends meet, who has, somebody who has a family at home and has to provide for them and has a lot of overhead, is going to have a different strategy from somebody who is single and has no overhead and has a lot of disposable income. So therefore, you can't, giving someone advice when you don't know their situation, it's very hard to do. And that's one of the reasons why there's these disclaimers on. The reason for the disclaimers is that I don't want you to come back to me if something I suggest doesn't work and say, well, he told me to do it and it's his fault and I want him to pay the money back. Now it's not something that I'm interested in happening. And be advised. You can listen to something that I talk about, but you need to make the final decision and you need to take responsibility for that decision. And if it doesn't work out, well, it's not coming back on me that it didn't work out. You need to make the decision yourself, and you need to understand that stuff has risk. Even an 80% chance of something happening right, if you do a strategy that works 80% of the time, still 2 times out of 10 it's not going to work. So you need you need repeated instances. You need several trades that have a good chance of winning, and you need to do them several times, because if you just do a trade once, then anything could happen. But if the amount of times you do a trade, as that number reaches infinity, your actual return will start to approximate the expected return. So if you flip a coin once, it's very unlikely that it's going to be 50% heads or tails. Actually, it's impossible because you just flip it once. But if you flip a coin twice, the likelihood that once it's going to be heads and once it's going to be tails is pretty low. But if you flip a coin 1,000 times, you're going to get closer and closer to 50% heads and tails. And it's the same with options. Just one time is not going to tell you whether a strategy is working or not. And one thing people do to help them figure out about strategies is they backtest stuff. Now, I'm not the best guy to talk about with backtesting because I'm not. That's not my level of expertise. I can't describe to you the best ways to backtest things. So go to somebody else for that. But back to appropriateness of trading options. Okay, so just some basic guidelines for you if you're looking at trading options. Most brokerages require you to have, I think the minimum you can pretty much find to trade options. Well, I don't know if there is a minimum to buy options, but most brokerages have a couple tiers of options trading. The first one being you're allowed to do a buy right. A buy right is when you sell a call option, but it is secured by the amount of shares that could get called away if that call option if you get assigned on that call. So, for example, if you sell one call, you need to have 100 shares of a normal options. One call controls 100 shares of stock. So, a buy right options trade is when you buy an underlying and you sell a call against it. And so, in a sense, the trade is it's a managed risk trade because you're actually, I'm not going to say it's a managed risk trade. In a sense, the trade is a safe one for the brokerage because you put up the money to buy the stock. And so if the stock goes to zero, that's your money at risk. And if the stock goes through the call strike and you get assigned on that call, you have the stock to be assigned and get called away. And so it's relatively safe for the brokerage. Remember, when we're thinking about different levels of trading, think of it from the brokerage's point of view. What sort of risk are they incurring? The second tier, now that first tier can also include any sort of buying options. So buying calls, buying puts. Now with options trading, you don't have margin in the sense of if you own an option, you can't use that as like a marginable thing to buy to borrow against. So for example, if you own a stock, well, that if you own a $50 stock, that can be used sort of as margin because the stock has some value. It's very unlikely that the stock's going to go to zero, and so you can put up that stock as collateral against doing another trade. With options trades, you can't generally do that. So if you own a bunch of call options, you can't use that premium to guarantee some other trade. So you don't need a margin account to trade options necessarily. Now, using to hedge against options trades with a stock, it's recommended to have that, but you don't necessarily need that. The minimum amount you need in a options trading account to sell options is, I believe, $2,000. I believe Tastyworks would do it for $2,000, but to sell options naked, that's the third tier of options, and selling an option naked is risky because you can lose more, especially selling naked calls. Selling naked puts, what you can lose is just the difference of that strike price and zero. So there's defined risk. But selling naked calls, there's undefined risk because a stock could go to infinity. And so if you're selling naked calls, the brokerage is taking the risk that your account could go negative on them. And then, they're holding the bag, basically, if your account blows out. Now, you're going to have to pay them back, but they're initially holding the bag on that negative account. So it's the highest tier of being able to sell of options trading as far as brokerages are concerned is to be able to sell options naked. Now, in the professional trading world, there's no real tiers. It's just, you're backed, you have a clearing firm, and you, as long as you can put up whatever capital requirements, you can do whatever. But in the world of retail trading, there's generally tiers of options trading. And to sell calls, like I said, the minimum amount you need is $2,000. But you probably need at least $5,000. I know TD Ameritrade, Thinkorswim, you're allowed to sell naked calls if you have at least $5,000. But I would personally not get into selling naked calls until you are a lot more experienced, because of the big risk you are incurring if something really crazy happens. You don't want to be in a situation where you're having to pay back over several years some brokerage right when you're starting to learn how to trade. So don't do that. Don't sell naked calls when you're first starting out. By the time you're ready to sell naked calls, what I'm talking about in this video should be very well known to you already. So a lot of warnings ahead of time, but I think that's really important that you realize that this is a game where you need capital, and you need to be able to have capital that you are willing to part with if all goes wrong. And you need to be comfortable with that, because if you're in a situation where, okay, you put up, let's say, $10,000, but you need that $10,000, like you put it up as a sort of like advanced savings account to put it and trade with it, but you actually need that money as either emergency money or you're going to need it in 6 months or something, then that really isn't money you should be trading with. You cannot make rational decisions with money if like, let's say you have $10,000, and if you lose 1,000 of it, all of a sudden you're panicked and you're gonna have to fold your cards. that's not a situation you want to be in to trade rationally. You want to have money that's earmarked for trading that you are not using for something else. And I spend a lot of time and drill this into you, but it's a very important thing. Before you become a trader, you need to learn how to save money and live below your means. Now, that's going to sound, people are going to say, that's obvious, but guess what? Statistically, the amount of the population who actually can successfully save money and live below their means is pretty low. So before you start getting into the trading world and investing world at all, you need to learn how to save money and live below your means. So if that's not you yet, then focus on that. That's a huge accomplishment if you can learn how to live below your means and how to consistently save your money. That is going to be the engine for everything in life, and is almost ultimately, if you can't accomplish living below your means, then you're not going to be able to accomplish your goals in life. So focus on that first before you get into trading, because trading is essentially how to expand your capital once you have it. But if you don't have a decent either job or source of cash coming in to start with, then you're not going to be able to expand that amount of money. And if you're not able to save money and balance your budget and be responsible with money, then trading is just going to exacerbate your problem. So once again, not an exciting video for those. I know people want immediate action, and they want to like press buttons and have a chance to double their money and excitement and all that kind of stuff. But actually, trading is not about that. It's about managing your risk. It's about protecting your money, and it's about making smart calls, and it's about training yourself to act in a rational and predictable, logical, and rational manner across many different types of situations. So I guess I've browbeated you enough for today, but some stuff to think about. Once again, for some, all this stuff is obvious, but I can tell you for most people, learning how to just live below your means and save money every month is a huge barrier and a huge thing to get through. And I encourage you to work on that if you're in that category. I can tell you that it's life-changing. One thing that helped me when I was struggling to live below my means was to start a 401k account with my company. It forced me to save. It got the money away from me, and I put 28% into a 401k one year, and believe it or not, I had money after that, and I wasn't living check to check a year or two later. So first step, learn how to live below your means. Learn how to save money consistently every month. Once you're doing that, then come back and we can talk about how to start trading options. Thanks for watching, and I apologize if this is obvious to you, but we need to get some basic foundation and framework before we start down a path of making decisions with leverage and that sort of thing with your money. Anyway, okay, so thanks for watching. Looking forward this week to some exciting shows. Tomorrow we do have off because it's Memorial Day, and I will see you back here, though, on Tuesday for some exciting trading coming into this next week.